Job market damage still remains very deep. The American economy lost at least 345,000 jobs in May, and the unemployment rate spiked to 9.4%. Economists describe the Labor Department's monthly jobs report as clear evidence of broadening national distress, as millions and millions of households grapple with joblessness and lost working hours, and many more are having their hours cut. In actuality, the true unemployment rate is probably above 15% or more, including those, if you include those who have given up looking for work. The fact of the report showing the highest unemployment rate in more than a quarter century testifies to the stark fears over the economy. The free fall that the job market was in does finally appear to be leveling off somewhat. Although stock markets shrugged off the report, interest rates on government debt surged, hitting their highest level in 6 months as signs of things to come, as investors bet that inflationary pressure would come with any economic recovery. In other words, if you keep borrowing more money and printing more money, you will have inflation when the economy, or if the economy, begins to recover. It's just the way the economic model works. Experts emphasize that the slowing pace of deterioration does not alter the reality that the economy remains very weak. These are still terrible numbers, said Chief United States economist at High Frequency Economics. We're 1,000,000 miles or more away from a recovery. And rather than a sign of renewed life, the May jobs report suggests merely the end of panic unleashed last fall, when the investment house Lehman Brothers crumbled, freezing credit to much of the economy. That wild disgorging of inventories and workers that we saw in the aftermath of Lehman, what you're seeing is reversal of that dynamic, theoretically, said the chief economist at the research and trading firm ITG. You had companies throughout the world that suddenly had very serious concerns about access to capital, and they cut spending and cut workers well beyond any connection to demand. Supposedly, there's now a better tone to the information or data. But if primal fear has ended, comfort is nowhere to be found. Home prices appear to have hit bottom in some areas of the country, but construction remains extremely weak. The auto industry and retailing industry remain in serious distress. The job market is likely to remain in the dumps for many more months. The home foreclosure crisis is growing. More and more people are losing their homes. And, like I say, the true unemployment rate is actually probably more like or above 15%, because many people have given up looking for work. And then there are millions more who are now working less hours. Their hours have been cut along with their benefits or pensions. And there are many more job cuts to come. There really is not an economic recovery. It will be very hard to have an economic recovery because it works like this: no job growth, no economic recovery. If you don't have positive job growth, if it's always in the negative month after month, where hundreds of thousands of jobs are being lost every single month. There's just no way you can have a real economic recovery. Not at all. And, once again, there's something more going on here. There's something bigger than all these things. It's happening. There's never been times like these before, and there never will be times like these again. There's something much more happening here. Already, some 6 million jobs have been lost since the economy peaked in December 2007. And with employers still cutting jobs, the total may reach 9 million or more before the job market could possibly even turn around, if it can. And that would represent approximately 6% of the workforce. The number of long-term unemployed, those out of work for 27 weeks or more, now stands at a record 3.9 million people, triple the number at the start of the recession. And with employers continuing to shed jobs, the jobless rate is likely to top 10% and could remain stubbornly high for some time to come. The economy had two horrific quarters in late 2008 and early 2009. Really, the worst back-to-back quarters in at least 50 years or more. Things have stabilized a little, but the fact is you still have job losses. I suspect that we will continue to need $1 trillion worth of deficit financing, fiscal stimulation, for years to come, said the managing director of PIMCO, which runs the world's largest bond fund. This economy is still de-levering. It is still at the whim, so to speak, of savings versus consumption. It is de-globalizing. It is re-regulating. These are all forces that slow growth. And the contraction in employment has cut a wide swath, sparing few sectors or industries, unlike past downturns. And until recently, government payrolls have also held up relatively well, but now that appears to be changing. With state and local budgets getting squeezed, job cuts have picked up. Falling home prices have cut into local property tax rolls. Local sales taxes are drying up, and job losses have taken a big bite out of state income tax receipts. The government also shed at least 7,000 jobs in May. State and local governments have to balance their budgets. They're under tremendous pressure, and we're likely to see more during the summer. There were significant losses across all the sectors, in the goods producing sector, and the service producing sector, and large, small, and medium-sized businesses. So the bleeding is coming from all the different veins. The manufacturing sector remains the hardest hit, with another 156,000 jobs lost last month. And while the pace of job cuts may be easing a little, economists say the ongoing downsizing of the auto industry means that sector will face continued heavy job cuts throughout the summer as more plants are closed and parts suppliers shut down. Retailers have also been hammered by a sharp cutback in spending, cutting another 17,500 jobs last month, and consumers are also cutting back as they see more job losses coming across all sectors. Spending will likely remain subdued as long as the unemployment rate continues to rise. Until employment stops falling, this recession is still ongoing, is still intact, it's still happening. And once again, all these things are connected to everything else that's going on around the world. And these are more signs. These are the end times, transition days. The transition is ongoing, continuing. It's happening every day all around the world.